Hello and welcome to another episode of our educational series here at Five Plan Partners. I am Mark Hume, and today I'm excited to be talking to you about 2023 tax planning. Recently, the IRS has released their 2023 data for tax brackets, standard deductions, new 401k contribution limits, new IRA contribution limits, HSAs, and FSAs. So we'll talk a little bit about some of those areas today and some of the steps that you might be able to take to improve your life both today and in the future from that foundational aspect of tax planning. Across the board and in response to inflation, the IRS has raised tax brackets and retirement account contributions by 7 to 10%. So let's start with the biggest deferral amount possible, and that's your 401k. That maximum deferral is now gone to $22,500 per year, and the catch-up contribution has gone to $7,500. And this allows someone over the age of 50 to contribute over $30,000 into their 401k on a pre-tax basis. IRA contribution limits saw a $1,000 increase in their annual contribution limit, and then you still have the $1,000 catch-up provision if you're over the age of 50. So now you have $6,500 in maximum contributions if you're under 50, $7,500 if you're over 50. And remember, there are some income limit considerations to be aware of and to work with your advisor, making sure that you're maximizing your ability to contribute to retirement accounts if that's what makes the most sense for you. Tax brackets and standard deductions had an approximate increase of about 7%. We won't list all the individual brackets and how much the specific dollar amounts have risen to. It's just important to note that there are changes there to review and to make a great plan on. I think about the work that I do with some of my clients, whether we're doing proactive IRA distributions, partial Roth conversions. All these different brackets will be numbers that we'll be paying really close attention to in the third and fourth quarter of next year as we're trying to maximize and create the most tax efficient year for our clients in 2023. We encourage you to engage in the same conversations and develop the same strategies, because executing on these strategies on a year in, year out basis can really pay dividends for you over long periods of time. Additionally, the alternative minimum tax has been increased. And so if that is something that you're subject to, you want to work really closely with your tax professional preparing your taxes to see if there's any opportunities that you can take advantage of as that amount has risen. And FSAs and HSAs have also seen a rise in the maximum that you can contribute to those accounts. And those can be really beneficial for you either this year, or you may have heard me talk about in the past how I think personally, and I have a really strong opinion on this, that an HSA can be one of your most valuable retirement planning tools if you can realize the delayed gratification of those particular accounts. So there's a little bit more opportunity to put more money into those accounts. And with the HSA, I just think about the ability to invest those dollars and compound them for decades, and then be able to pay for your medical expenses on a triple tax advantage many, many years down the road. And that's just a tremendously valuable benefit that's available to some of you if you use a high deductible health plan. But again, there's an important instant gratification, delayed gratification topic that you really need to understand when you make a commitment to that type of strategy. One important metric that did not change, unfortunately, is net investment income tax. That's held steady where it was for the previous year. Married filing jointly, $250,000 of modified adjusted gross income. Single, $200,000. Married filing separate, $125,000. So unfortunately, that number did not move up with inflation. And that's a number that sometimes we pay really close attention to when we're reviewing a client's tax return, projecting their income for 2023. And unfortunately, if you're right on the edge of that particular number, that did not see an increase from the IRS. So concluding this discussion, you've got more opportunity to save in your 401k, more opportunity to save in your IRAs, your tax brackets are rising, your standard deductions are rising, your ability to contribute to an FSA or an HSA has risen, but the time to make plans to take full advantage of these opportunities is right now. And so if you're not working with someone in a tax planning capacity, we encourage you to reach out to someone that works with clients in this manner. We would be glad to talk to you about any of these topics, but I love being proactive about the opportunities that the IRS has laid out recently, taking advantage of them starting on January 1st and making sure that you grab every dollar of tax efficiency that you can. Year in, year out, attention to these types of topics yields tremendous dividends over decades. And it's a really important matter for you to consider and see if there's any of these strategies that might apply to you. So thanks so much for taking a few minutes to listen to us today. 2023 tax planning is our topic. We hope that you will be proactive and have a conversation on this topic. And we look forward to seeing you next time.